Fundstrat Global's technical strategist Mark Newton said the S&P 500 has retraced almost half of the entire decline from early January. Newton said he's cautious on the outlook for the S&P 500. While this latest rally was expected based on cycles into the March Fed policy meeting, it's difficult to chase gains above 4,450 given intra-day overbought conditions. The S&P 500 closed at 4463 on Friday in New York. Structurally, this rally has broken above early March highs, which was thought to be a positive, Newton also said in a note. Overall, it looks right to still favor defensive sectors along with commodities and bonds vs chasing stocks on this first big bounce off the lows. Goldman Sachs' David Kostin said S&P 500 firms face a daunting task when it comes to return on equity this year, given ROE rose to a record high of 22.1% in 2021. The two key challenges, rising costs and wage inflation. ROE also will need to clear the hurdle of rising US interest rates, Kostin said. Potential key market events this week: the war in Ukraine, the COVID-19 situation in China, the UK will update its budget on Wednesday, and there will be emergency NATO and G7 meetings in Brussels on Thursday. Today's agenda: local, NZ February credit card spending. Overseas data, Bank of China LPR setting, UK March house prices, US Chicago Fed National Activity Index February. TD Securities on China rates. Although PBOC didn't cut its medium-term lending facility, or MLF, rate on the 15th of March, there is a small risk that banks trim their one-year LPR fixings following official comments pledging support to China's economy and markets. Instead, we expect a 50 BP cut in the RR very soon. Activity data for Jan-February was less weak than feared, and the property sector is showing signs of stability, reducing the urgency to cut the LPR. Market highlights: ASX futures up 59 points, or 0.8% to 73.23. AUD plus 0.5% to 74.15 US cents. Bitcoin on Bitstamp.net. On Wall ST, Dow plus 0.8% S&P 500 plus 1.2%, Nasdaq plus 2.1%. In New York, BHP plus 1.3%, Rio plus 0.8%, Atlassian plus 5.2%. Tesla plus 3.9%, Apple plus 2.1%, Amazon plus 2.6%, VIX minus 7%. In Europe, Stocks 50 plus 0.4%, FTSE plus 0.3%, CAC plus 0.1%, DAX plus 0.2%. Spot gold minus 1.1% to $1,921.62 US per ounce in New York. Brent crude plus 1.2% to $107.93 US a barrel. US oil plus 1.7% to $104.70 US a barrel. Iron ore plus 3% to $151.35 US a ton. 2-year yield, US 1.94%, Australia 1.36%. 5-year yield, US 2.14%, Australia 2.23%. 10-year yield, US 2.15%, Australia 2.57%, Germany 0.37%. From today's financial review. Shares tipped to climb. Wall of worry. Shares are tipped to rally on Monday as investors shrug off war in Ukraine, oil market ructions, inflation, and the potential for COVID-19 lockdowns in China. SA election rout confirms the COVID shield has gone. The parallels with the May federal election are obvious. The Morrison government is on its knees and can't rely on the good things it did in the pandemic to save it, writes Philip Courrier. The top 4 Australian universities for producing CEOs properly identified the University of New South Wales, Australian National University, Macquarie University, and the University of South Australia as the top 4 institutions for producing CEOs in Australia. United States. Moderna closed up 6.3% after the drug maker submitted a request to the U.S. Food and Drug Administration to allow for a second booster of its COVID-19 vaccine. Shares of Boeing finished up 1.4% after reports the plane maker was edging toward a landmark order from Delta Air Lines for up to 100 of its 737 MAX 10 jets. General Motors bought out the SoftBank Vision Fund 1 stake in self-driving startup Cruise LLC for $2.1 billion, ending the Japanese investment firm's involvement in the business and giving the Detroit automaker 80% ownership. GM also said it will invest another $1.35 billion in Cruise, which makes up for the amount that SoftBank had pledged to invest in the startup once the company deploys vehicles in a ride-sharing business, something it is preparing to do. European stocks erased losses since the invasion of Ukraine on February 24 and posted their best weekly gain since November 2020 on Friday. The Stoxx Europe 600 index closed 0.9% higher, with technology and travel and leisure stocks outperforming. The gauge has rebounded more than 9% from a low on March 8 on optimism around peace negotiations between Russia and Ukraine and upbeat signals from the Federal Reserve on the health of the economy. Investors continue to keep an eye on geopolitics, but focus is turning now more to margins, how commodities will hit businesses, and expected estimates revisions, said Patrick Nielsen, Deputy General Manager at Mapfre Asset Management. We have a more cautious view on equities now, but expect markets to be in a range for a bit, as we have already seen the bottom of the declines, as long as the war doesn't take a more negative turn. Asia. The Shanghai Composite Index ended up 1.1% at 3,251.07 points on Friday, while the blue-chip CSI 300 index rose 0.7% to 4,265.90. Leading the gains, the real estate index gained 6.7%, buoyed by hopes authorities will loosen credit restrictions to spur home buying and ease a severe liquidity crunch facing the sector. While China surprised markets by keeping its medium-term lending rate unchanged this week, investors have been expecting more easing moves, including possible cuts to banks' reserve requirements. Most analysts polled by Expect China will keep its benchmark lending rate steady at its monthly fixing on Monday, though a few expected a small reduction in the 5-year rate, which influences the pricing of home mortgages. The Hang Seng Index ended 4.2% higher for the week, the best performance in 6 weeks, despite shedding 0.4% on Friday. The Hang Seng China Enterprises Index fell 0.6% to 7,366.42 on the day. Currencies. Capital Economics said it sees no reason yet for the US dollar to lose its dominance, though it struggled late last week even after one policymaker still sees potential for a 50 basis point increase. The dollar's muted reaction suggests to us the bar probably remains higher in the US than elsewhere for additional rate hikes this year to be discounted by investors, which may prove to be a headwind for the dollar in the short term. Nonetheless, we still think the greenback will edge higher against most currencies over the course of this year. Indeed, we have revised up our forecast for the 10-year US Treasury yield, which we expect will rise, in general, by more than 10-year government bond yields elsewhere. Capital Economics expects the US 10-year yield to reach 2.75 to 3.00% by the end of 2023, broadly in line with the median Fed policymaker projection. Commodities. Marex Spectron said it sees more upside in metals and dips now present buying opportunities. These commodities remain tight amid a world of uncertainty. Activist investor Pentwater Capital Management, the largest minority shareholder of Canada's Turquoise Hill with a 10% stake, has rejected a $2.7 billion bid for the copper producer by Rio Tinto as too low. If Rio believes that its current $26.90 proposal is compelling for Turquoise Hill shareholders, Pentwater would be pleased to purchase part of Rio Tinto's stake in Turquoise Hill for that price, it said. The London Metal Exchange will raise its daily price limit for nickel trading to 15%